Okay, we're back. I think this is part 5 or part 4. Okay, so I said I want to buy in here, so it's 88676, 88676, and we are going to risk 62 pips, 63 pips, so that's 88037, 88037, 88037, and profit, we're gonna, okay, 90260, 90260 place. So now I can adjust it. So this is 63 pips and the current spread is 4.9. So I'm just going to place it here, and we're just going to double the stop loss. So we're just going to move it down slightly. It's going to be, I think, if I'm correct, it's going to be about there. Yes, I'm correct. So that is another trade that we're in, and we're targeting these highs. So let's see how this plays out, and we're going to move on to the last pair, which is the NZD Chef. Do I see anything on the NZD Chef? Nothing at all. Okay guys, so I'm just gonna recap. We'll go back to Euro JPY. So like I said guys, I'm not a professional Forex trader. I am a retail trader. I trade from home, and every single day that I trade is a learning curve for me. So as I am documenting this journey, I'm also learning, and hopefully you guys are learning as well, and hopefully me documenting all of this may help all of you to not make some of the mistakes that I am possibly making, that you can see, and help your trading, and possibly actually benefit you and make you more profitable. I'm just going to take a sip of my tea guys, just excuse me for 1 second. Okay, that tea is cold. I had a very long day today, and you know, I love drinking tea and coffee. And just before I go to bed, I usually have a cup of tea. It doesn't keep me awake or anything. It's just something that I like doing. I love drinking tea. I've always have done. I guess most people live in the UK. They love drinking their tea and their coffee. So yeah, like I was saying, this is just my journey of trying to grow a £300 account, and it's also a learning curve for me, and I'm just going to see how this plays out, how this goes. You know, maybe all of this is going to help in the future. maybe it's going to be beneficial to me and to others that are watching. So Euro JPY, I entered a buy. The reason I entered a buy because we have a strong break of the high here. So we actually pulled back, then we tried to make this move back up here. We pulled back, then we broke above this level, which is a buy for me. Is a valid signal for a buy for me. Now going on to the weekly, I can see a bullish bias. We can see that price came down here, and then price rejected here, and price is going back up. So when this happened here, we go on to the daily. So you would be looking for a buy only when price was above the MAs. So you can see here the price did go above the MA, and then there was a slight break right here. We had this candle, and then we had a break here which just closed above. Then you entered and you could have held it, but you wouldn't have seen any of this. You would have just saw this downtrend, and you would have played it very safe, and you would have waited because you had a feeling that price was actually going to turn and come back down again, and that's what it did do. So that's why I always wait for the price to go actually above both of the MAs, and then wait for a signal to be produced and then enter. So this is where the signal has been produced, and I'm hoping that price goes up here and tests this high and hopefully breaks it, and then carries on going to the highs here, and then who knows where. We'll just milk it as much as we can. So that's why I entered a buy here, and we will wait and see what happens. Now we entered AUD USD, and we entered a buy limit as well. So why did I enter a buy limit? Because both of the prices are above both of the MAs, and the direction of the price is showing that the direction is moving up, so we're bullish. We move to the weekly, and we can see a bullish move beginning from here and moving up. I do notice that it's not above both of the MAs, but then I went to confirm with the monthly to see whether we truly underneath the MAs or are we in a bullish bias. So moving on to monthly, we can see price broke above, price came down here, rejected, and now what's looking like a bullish candle. So at the end of this month, if this closes above, then what we are going to most likely see is a beginning of a uptrend, and maybe price coming, testing this resistance here, testing the lows here or here, and maybe even going higher. This is what I think is going to happen. Moving to GBP USD, why did I enter a buy here? Because I saw this downtrend, and then I saw a break of this trend, and I see price nestle nicely above the MAs here, and the previous two times it's done it, it hasn't been in this kind of fashion. Usually when it's like this, it's indicating that it's going to be going up. So I'm following what I consider to be a move to the upside. Just looking at the daily here. Now can I confirm this with the weekly, a higher time frame? So I move to the higher time frame, and I can see 3 days of bullish activity with a very weak bearish candle here, and we are just breaking above the 50 MA here. And looking at the overall picture, we could see that price had a very big move up, and then we had a retracement, which is, in another word, a retracement is also a pullback. It's just price going back to these highs here, you know, a certain level, and testing those prices, seeing if people are happy to buy from there again, and then price starts going back up again. So when that's happening, a lot of people you know, take profit and stuff like that, and stop loss are being hit. So I go into a higher time frame, which is monthly, and I can see the price is truly above the MAs, and does look like it's gonna be moving higher. So that's how I see it anyway. Maybe I'm wrong, but maybe also I'm right. I'm hoping I'm right, but if I'm not, then I'm gonna go back and I'll do more analysis, and I'll see where I potentially made mistakes. Every single trader, I think, whether he's professional or he's like us, is going through the same thing. When they get into a trade, they don't know whether it's going to go straight into profit or not. These things you cannot, there is no way you can guess. You can tell where market is going. Okay, the only reason people use price action, people use, you know, downtrends and uptrends and MAs just to give them a slight edge. That's all it is. So we see 4 bullish candles. We expect some sort of pullback to happen. We expect, okay, a break to happen. So when break happens, we put in a buy, hopefully waiting for price to come back down and pick us up. Well, we identified it here correctly. You put in your buy, they didn't come back and pick you up, they just carried on going. So, you know, you cannot predict what market's going to do. You only see what you only trade what you see. So what I see here is a bullish move occurring. Now, just because I know there are psychological levels here, what I mean by psychological levels is that psychologically people think that, okay, this is a level, so price is gonna, you know, turn here. So a lot of people possibly take profit at these points, and that probably helps to change the market, and then carries on going down. I'm not sure, but this is what I think. So when this has happened twice, possibly the third time, they probably don't go down. Third time, fourth time, they probably decide, well, we're not going to go down this time, we're just going to carry on going up. And I just see it like that. If market didn't do stuff like that, then how the heck is market going to move the market? Market needs money to move the market, so the money has to come from somewhere. So it's not going to come from their pocket, is it? It's obviously going to come from the retail traders. It does come from them sometimes when they are wrong. People are milking the market, but most of the market, I think, is probably made up of retail traders' money. So that's how I see it. I'm just going to stop the recording here, guys, for 1 second, and then I'll be back on the next part.